Hello and a warm welcome to the CNBC Africa special broadcast coming to you live from Accra in Ghana. I'm Gugulethu, Cele, where today we are participating in conversation at the MasterCard Foundation Symposium on Financial Inclusion for 2017. As we know, financial inclusion is a critical conversation for us to be having in the African context, but more importantly, we take a look at the lessons that have come across from all spheres of sub-Saharan Africa and how, again, we need to ensure that the outcomes, product developments that we hope to achieve, regulations and rules that we put in place all speak to one particular stakeholder, the customer. Client-centric strategies as well as customer-focused strategies to ensure that we reach a favorable outcome of really meeting and addressing the needs of the customers that we serve, one of our most important stakeholders. Well, today we'll be taking a look at this particular theme within the West African context, understanding just how exactly financial institutions, innovators and entrepreneurs, and of course, regulators also look to participate in this particular sphere. You too can join us in conversation as we look to unpack this conversation in the next hour as we're joined by our live audience, participants at SoFI2017, and of course our panel members here on stage. The hashtag to use is hashtag SoFI2017, SoFI2017, and use the account name at CNBC Africa and at MasterCard Foundation as you continue to tweet. Let me not waste any further time by introducing our panelists who will be joining us in this conversation, leaders who will be speaking about the financial inclusion dynamics from Anglophone states and Francophone states, specifically focused in West Africa. Ladies and gentlemen, closest to my left is Ms. Temitope Akin-Fadeyi, Head of Financial Inclusion Secretariat at the Central Bank of Nigeria, followed by Mr. Edward Effah, who is the Group CEO of Fidelity Bank Limited in Ghana. And last but not least is Ms. Maimouna Gueye, who is the Principal Financial Inclusion Officer at the African Development Bank. We'll continue to engage with our audience members who will also participate in a Q&A session with us here in studio. And of course, you at home, watching online or via your television screens are more than welcome as well to share your insight regarding this conversation. Let's officially begin by taking a look at the dynamics when we take a look at the West African context and financial inclusion. Of course, boasting a powerhouse of economies, many of which have shown various gains and strengths with regard to levels of financial inclusion. But speaking specifically about the regions that you represent, Nigeria, Ghana, and Francophone West Africa, I'd like us to get a quick synopsis of what the status quo is regarding financial inclusion. Temi, let's start with you.
Okay, thank you very much, Gugu. In West Africa, I think financial inclusion is a theme that has evolved significantly, particularly over the last 5 years. One of the common things we see across the countries and the region is that they have begun to develop a financial inclusion strategy, which essentially is a roadmap for the country to drive the process of inclusive growth in the economy. Specific to my country, Nigeria, we developed a financial inclusion strategy, which was launched in the year 2012. And I'm glad to report that 2017 is our 50th year of implementation, and that strategy is being reviewed for greater impact. Now, looking beyond Nigeria, we know that for West Africa, within the Anglophone sphere, a lot of the central banks are independent, so they've also taken the lead, together with the Ministry of Finance and other stakeholders, to develop a strategy at country level to implement the strategy as well. I believe Maimouna will speak a bit more about the West African experience because there it's a bit different. There's a regional collaboration of all the countries in the region, and Maimouna can share some perspective.
Before we get to Maimouna, Edward, I'd like to start with you also getting an understanding of the level of financial inclusion. Just how far are we and what is the landscape like at the moment, specifically in Ghana?
Ghana has made a lot of progress with regard to financial inclusion. If you look at Ghana at about 2010, nearly half the population, half the adult working population didn't have access to any financial services. From 2010 to date, that number has been reduced to less than half. So we now have about 24% of the population, adult population, not having access. The major game changer has been mobile money. Today we have some 10 million mobile money subscribers. Banks like us have partnered with MTN and we've launched Yellow Save, a savings product. We'll be launching a lending product. So mobile money has been a significant game changer. In addition to all of that, I think the government and the central bank have been very forward thinking in trying to promote financial inclusion and taking it to the next level. So the government has launched a national ID project where we'll have an ID card which can be used to KYC everybody. The government has also launched mobile interoperability, which will enable all the mobile money players to switch from one to the other. At the moment, they're all kind of working in silos. And then in addition to that, the ID card, there's a digital addressing system, which makes it a lot easier to identify where people live, the demographics of different areas, and what sort of services you need to offer them. So we've made significant progress. You have something like nearly 1,000 different financial institutions, regulated and unregulated in the space, 33 banks, non-bank financial institutions, savings and loans, microfinance institutions, and at the bottom you have a number of informal money lenders, also collectors, everybody playing their role in offering services to every person. So we've made a lot of progress, but there's still that last mile in deepening the sort of offering we have. At the moment, it's all payments and some savings, getting into credit, getting into insurance and other products to deepen the service.
Several themes that we can certainly explore there and obviously look to unpack, especially given the sentiments that were mentioned by the Governor of the Bank of Ghana earlier here today at the symposium. Maimouna, Francophone Africa, with regard to the progress, I understand that we've also seen a lot of it being really spearheaded by mobile network operators.
Exactly, Gugu. Perhaps before getting to the dynamics, I'd like to explain a little bit what the Francophone Africa region is. It's actually called the Gueye region, West Africa Economic and Monetary Union. It's comprised of 8 member countries. For those who don't know, those are Benin, Burkina Faso, Côte d'Ivoire, Guinea-Bissau, Mali, Niger, Togo, and Senegal. So that's Francophone West Africa. It's been an amazing region in terms of innovation. Actually, the central bank in 2006 issued regulation for e-money. That's way before M-Pesa came along, and the very first license was issued in 2007. So that's how early this region was really looking at how to provide access to financial services for the lower part of the population, lower income earning people. So what has been done, and that's been so amazing, is conducive regulation. From 2002, the Payment System Act said that entities such as microfinance are invited to offer financial services. Non-banks are invited to offer financial services. So that gave really a big push to access to financial services. Other than the regulation, we also have the infrastructure, the financial infrastructure. The central bank led the ground for very strong payment systems, integrated regional payment system that actually are aligned to the last standards, the payment aspects of financial inclusion standards. So today you have a regional switch that integrates 8 countries. Card payments, mobile money are integrated, and the African Development Bank is supporting these projects. So just to give you some figures, the region today has 35 million mobile money subscribers, up from 11 million in 2015. So that's a huge growth. In 2010, there were only 2 million mobile money users. So
and this is across the 6 countries that you mentioned.
Across the region. You're talking about 35 billion in the value of transactions.
35 billion francs.
Another aspect is the dynamics across borders, where you have several corridors, approximately 11 corridors from Côte d'Ivoire to Burkina, Mali to Niger, Senegal to Mali. Those are extremely dynamic regions. So that's what I wanted to highlight.
So clearly highlighting that there is some dynamism taking place here. Perhaps some of the East African representatives in the room with the M-Pesa background, obviously looking at some opportunities that they could also tap into and lessons to also learn. Naturally, many of you alluded to the fact that regulation has obviously opened up and provided a platform for this innovation to take place and enhanced product development to also be developed. I want to come to you, Temi, as a representative of the regulator, and as you alluded to off-air, often being identified as this policeman who is meant to monitor and often at times not really open up the landscape. What are we seeing from a regulation perspective and specific to Nigeria with regard to the several workshops on financial literacy, on product development? What particular outcomes have actually occurred from that? And are we moving into a direction where perhaps sandbox regulation is something that's likely to be considered by many West African markets in order to facilitate and encourage product development and innovation?
Yeah. Thank you very much, Gugu. I think regulation has actually evolved because we know that the landscape for financial inclusion in itself has also changed. And innovation has actually forced traditional supervision to rethink itself. Now, speaking about the Nigerian example, when we started looking at this critically, we saw that existing policy could not drive the kind of change we needed to see as a country. So one of the early policies we looked at was to say, how do we drive digital payments in the country? And then as far back as 2010, 2011, the mobile money policies were issued, and the first set of licenses were given to about 20 players, thereabouts, to say, you know what, we don't want to stick to traditional banking. Brick and mortar has brought us this far, but we don't think it's going to take us, to the last mile. We needed to innovate. Because what did we see in Nigeria? A primary concern of exclusion is the challenge of distance. People needing to travel over, very long kilometers to get financial services. But digital channels, what we've seen, it transcends the barrier of fiscal channels. So the agency banking framework came into play, the mobile money regulation came into play, and other policies as well to support the landmark. Now, what do we say about the regulator? The regulator is also changing because you realize that you cannot just formulate policies. Policies need to come from a process of consultation with a broader stakeholders. What we have now in Nigeria is a process whereby the regulator is talking to the market operator is talking to the consumer. We have an iterative, consultative process to develop policies that can actually address the marketplace. Yeah.
The communication is great, but how quick is the turnaround time? Because engagement is fantastic, but how quickly does that actually translate into regulation and company strategies that really focus on customer centricity?
It doesn't take that long, actually.
Give us a number, a figure.
So let me give an example. Now, you talked about something now, which I'll just quickly latch on. You talked about sandbox regulation. It's been a buzzword, right? A lot of us in this room, we've read about it, heard about it. Now, what have we begun to do? You find that innovation comes from the marketplace. It may not come from the regulator. It may come from consumers' action. Behaviors change. It may come from the market. So what does the regulator say? The regulator doesn't say, no, it doesn't happen. Maybe that was in the past. So what do we do now? You tell the market operators, let's discuss this issue. As we speak now, we have a situation whereby we've put together a team to look at this very critically. And what do? You don't wait until the last mile policy is out. You discuss, you release draft reports, you ask for consultation, and there's a whole feedback process. So in terms of timeline, it depends on the kind of regulation, but the point is, it doesn't take as long as it used to be, because now you have time, you have, I'll say, a very positive feedback loop that actually provides some clarity.
I'd like to throw a spanner in the works there and also ask you about the market. You say that you're liaising with the market, but as we know, as a central bank leader, you're no longer just engaging with banks anymore or financial institutions. We've heard of mobile network operators coming into the market, others from various other sectors who also look to join, even in the retail space. So you're liaising and engaging with multiple stakeholders here. How has that also changed, and does that also delay progress or actually expedite the process?
I think it actually facilitates, and there's a good example to give here. I talked about the agency banking framework, which was released in 2013. Yeah. What did we do after that? We saw the feedback from the market, we saw the implementation speed, and we went back to the drawing board. And there was a follow-on policy, the super agents framework. And that came from a direct market feedback. Yeah. So what did we do in that regulation? In the initial regulation, You needed to have the banks straight in front, deploying the agency network. But in the follow-on regulation, the super agent network, you then said telcos can come in and partner. So you see the feedback loop that then brings in other new players into the space. Yeah. And the other thing I wanted to mention as well, there was something else you mentioned that I forgot it.
With regard to the telco operators that also come in, you mentioned that you liaise with them from a market point of view overall. You touched on the sandbox regulation as well.
Okay, yeah, I remember what I want to bring out now. So what we find is it's not just central bank now talking to the market. There's also that collaboration between regulators. And there's a good example here as well. Now you find the central bank talking, for example, to the telco regulator, the Nigerian Communications Commission. As a matter of fact, as of today in Nigeria, we have a joint task force between the two industries to look critically at mobile money. So how do we leverage on the strength of the banking sector to develop digital financial services? And on the other hand, how do we leverage the telecommunications sector to achieve the same thing? So basically, collaborations like that is not just market regulator or market consumer, it is also regulator. And it actually enhances the implementation on ground.
Edward, I'd like to come to you as well because you've proven this with your partnership with MTN. Instead of viewing them as the enemy, instead you've gotten together and looked at avenues of collaboration. Are these some of the dynamics that we continue to see within the Ghanaian financial inclusion space?
Yes. Coming back to the central banks, I think our central bank is very collaborative and supportive. And in any market, you'll get a time when the market is developing, hasn't developed, and there'll be nothing. And then they'll come back and say, look, let's have some guidelines, and then they'll have policy. So our central bank has been very supportive. If I look back at some of the stuff we've done with MTN or our smart account, which we launched in 2014, or agency banking, in all the cases, there was no regulation when we approached it, but they quickly were able to think through it and come up with regulation. So coming back to our partnership with MTN, we expect to see more collaboration between banks and telcos. It's not a zero-sum game, and if you look at markets where mobile money has developed, the banks are still very profitable because the cake has been increased and everybody gets their share. And more importantly, you're able to bring into the economy a lot of people who were previously outside. So if I take today, mobile money floats in Ghana is about 2 billion cedis. That is over $500 million. This is money that probably wasn't in the system before. And as a bank, we're a beneficiary because we have a significant chunk of that money in our books.
And there's nothing wrong with that, right? You're a commercial entity. You're meant to continue to drive that. And that also makes me want to consider, stirring the pot slightly with regard to how, as a leader of a corporate entity, you ensure that financial inclusion remains part of your strategy when fundamentally you've got shareholders to respond to. Yeah. You need to make a return on investment. What the poorer customer on the back of our name tags is actually going through is actually none of your concern. However, you've prioritized it. How do you strike a balance between some of those needs?
It's a big balancing act, I won't deny it. It's got to be sustainable financially. We're not a charity, and therefore you can't be supporting financial inclusion ad infinitum when you're not getting anything much out of it. But it is profitable. It's both a social responsibility and it's got to be sustainable. The challenge is sometimes you can get the strategy wrong, sometimes it can be very expensive, sometimes the time it takes to break even can be very long, so you need the commitment that we're doing this for the long term. But at the end of the day, with technology, with mobile phones, online, digital services, you should be able to bank anybody earning, say, $100 a month profitably. I think below that level, you may get rural banks and other community savings groups coming in, but for a bank at that level, $100 a month of earnings, you may easily get 5 million plus people in any African country who are in that bracket of $100 to say $300 a month. The same people receive remittances, the same people pay school fees, the same people pay utility bills, and if you are able to make even $1 a month from them, it's $5 million a month that you're adding. It won't mean a corresponding increase in your technology cost or whatever. So it is strategically important. Sometimes time to market can be a while, but it's it's viable. We've seen it from our own experience. We've seen it from, the Kenyan banks like Equity Bank. But talking about the difficulty, I remember when we launched MTN Mobile Money, we used to be in the same building with MTN. We went upstairs, we all did the UAT test and all the rest of it. And for us as a young bank, we thought we were going to use mobile money to leapfrog the banks with the branches. 2011, there was literally no transaction on mobile money. 2012, literally no transaction. 2013, literally no transaction. And we began to think maybe we've made a mistake and we should, back out. But then it picked up very quickly in 2014, 15, 16, and now we have $500 million in mobile money floats. So it takes time, it can be painful, but you've got to be patient. And now we're moving from just payments to loan products, savings products, insurance, and many remittances. We're the only bank which receives remittances on mobile money. So there's a lot that you can build on it.
Clearly, lots of dynamics that have come through there, but I also want to understand the context within Francophone states and, of course, the interoperability of rather partnerships that also come together from mobile operators and banks. And I think you've confidently, very subtly said that there's still relevance of banks within the market and not necessarily to fear having their pie being eaten by the mobile network operators. Maimouna, from your experience, we've obviously seen several mobile network operators really spearheading and taking over the lead with regard to remittances as well as other mobile money payments with regard to the Francophone speaking states. But how do we extend this further to ensure that it doesn't necessarily depend completely on technology, or is technology and mobile that panacea that we allude to?
Yes, that's the challenge today in Francophone West Africa. We have laid the grounds for, I say we because I'm a former regulator, so I still speak as I'm still at the central bank, but there's been a great regulation, great infrastructure, so what do we do next? We have to build on the existing mobile money accounts that we have. There's a momentum here. However, when you look at the statistics, you would see that most people still transact in payments, barely little payments, but mostly airtime purchase and P2P transfers. We need to get to small loans. We need to get to digital credit. We need to get to digital savings. And this is where the switch.
Let's fast track to that particular issue because it has come up several times within the symposium as to how best do we get there to offer credit. How do we ensure that the data is protected? How do we ensure that
it's related
KYC and privacy is also accounted for?
To the engagement of stakeholders. The banks have to find interest in this massive wealth of customers. And, telcos can only offer payments. They can never offer credit or savings with interest, at least in most regulation. So these customers are there, 35 million customers in West Africa. They're there for the banks to use, to offer loans. So the regulator, I think today, has a strong interest in engaging stakeholders, and the interoperability project that you alluded to actually has started to be launched with many stakeholder engagement meetings, leveling the playing field between the telcos, the banks and the MFIs, the e-money issuers, so that everyone knows this is a win-win situation. Everyone has a market, and with the volume, like Edward said, with the volume, you will end up being profitable, but it does take time.
It does take time. One other element that is, obviously comes up with regard to the dynamics there is the data and information on some of these customers. We heard issues being raised such as KYC as well as product development, and you can only know who your customer is, what their payment trends are, if you have information on them. Sounds to me like the telco here might actually be in the power position, given that they have easy access to this data. However, it empowers banks and financial institutions. Edward, Temi, how do you respond to this as to how best we incorporate these elements to further financial inclusion goals in West Africa specifically? Who owns the customer, essentially?
I think that the telcos own the customer when it comes to payments and when it comes to, obviously, telecommunication services. because they own the platform and they want to protect their data. The banks own the customer if they are offering a savings or a lending or other product or a remittance product. So at the end of the day, if as a bank I was in partnership with an insurance company selling the insurance company my customers some insurance products, I would own the data until and up to the point where that customer has an insurance product and then the insurance company needs to know. So I think it's fair for telcos to own the data for their business. But telcos do not lend money. Telcos do not offer savings products. That is banking. And once we get into that realm, then banks need to have that data. Otherwise, we can't even offer the product. Yeah. The central bank will say, you don't know your customer. But when it comes to the payment side, I can understand why telcos can be protective over their data.
Temi?
Yeah. I think for me it's complementary. Essentially, the telco provides the essential platform to run the service, but the banks provide the financial services at the end of the day. Even though it's a wallet, but at the back end, that money still sits in a financial institution. So on the face of it, it's complementary. So sometimes I wonder, we have telcos in the room, we have banks in the room, and I wonder why the tussle. And I think it's the question you asked, who owns the customer? I would like to ask it in another way. Who is serving the customer? Because at the end of the day, it comes down to service. We are both providing essential service. So that data resides on the platform, right? So the telco really, in a way, they have a position of strength, but the bank is bringing something equally as strong to the table. I think that's my perspective.
Very briefly, before we go to an ad break, yes or no, does customer ownership translate into a customer-centric approach? Yes or no?
No for me.
Edward?
Yes.
Maimouna?
Not always.
No ways. Well, the two ladies say no, the gentleman's on his own. We'll continue to unpack this in just a moment, as there are many other themes that we look to explore with the audience and, of course, engage with you in our Q&A session. But we'll be back. We're going to take a brief ad break. We're still coming to you live from the MasterCard Foundation Symposium on Financial Inclusion for 2017, taking a look at the financial inclusion landscape within West Africa. We'll be back with more right after this. Perfect. Thank you so much, ladies and gentlemen. Please be on standby. This is a brief 2-minute ad break, and by 2 minutes, we mean 2 minutes. We're just going to double-check mics and ensure that we can continue with the second half of the conversation. We'd like to get your views as audience members with regard to a few questions. So by show of hands, are there any questions at the moment, just to ensure that we know where the handheld microphone needs to move to? I see your hand in the back, sir. Anyone else with a question? We'll take 3 questions in this particular round and then follow up with another series if necessary. Anyone else with any questions, ladies and gentlemen? Are we all shy? Means our panelists are doing a great job then in addressing your questions. I see your hand up, sir. We take 1 more question. Anyone else with a hand, just to ensure that the roving mic can make its way to you? Perfect. We'll start with the 2 gentlemen who have raised their hands. Everyone still comfortable? Still tweeting? Or you're waiting for lunch? Maybe that's what's happening. Certainly, ladies and gentlemen, we're just waiting a short while longer. We have about a minute. Handheld mic to the back there, sir. Thank you. And then we'll come this side. The other one can come to the far left-hand side. If you could please raise your hand again, sir. The gentleman with the question, with the spectacles in front of you, sir. Yes, just so that my colleague knows where to find you. There we go. You've got a microphone at the back, sir? Fantastic. Please do wait. I'll do an introduction back from our ad break, and then I'll introduce you to go ahead with your question. Perfect. How much longer, Denham? A minute. Perfect. Panelists, you still okay? Okay, perfect. So when people tell you that TV is all about show business, you should tell them the truth, that it's actually long hours, technical counting, and making sure that we have everything in place and position. Please stand by, ladies and gentlemen. We have about 15 seconds before we're on air. Welcome back. You're still watching the CNBC Africa special in collaboration with the MasterCard Foundation, talking financial inclusion, this time within the West African context. Many moving parts and dynamics that we've touched on so far in the first half of our conversation with regard to the regulatory landscape, how banks as well as telco operators need to continue to collaborate in looking for these efforts. But of course, as we shift up the conversation into the next gear now, we'll also explore elements with regard to more product development, technology and innovation, and of course making sure that customer information is well protected. We do have audience members who are joining us here and participants of the symposium, and we'll be taking questions from the floor with regard to some of their concerns regarding the West African financial inclusion landscape. You, sir, if you could kindly stand up so just so that the camera can get a nice shot of you, and if you could introduce yourself and go ahead with your question.
Sure. Armando from AB Bank Zambia. A question for Fidelity Bank. In Ghana, Fidelity Bank has been a pioneer in terms of financial inclusion and mobile payments since 2012. However, the question, would you have done anything different since 2012 in order to reach the same level of volume of transaction? I heard 500 million.
Thank you so much, Armando. Edward, an interesting question for you. You can go ahead and respond.
Yes, I think we have made, I would say, mistakes with our technology. And I don't know whether we could have done it differently because we did what we knew best at the time. So when we rolled out agency banking, for example, we acquired an agency banking platform to process our transactions. Shortly after we put on probably over 200 agents and the transaction volume grew, it became very unstable. So we had to withdraw it and slow it down and change POS. But on the other hand, it's very difficult to say we would have done it differently because whoever you speak with, whether it's Equity Bank, Kenya Commercial Bank, other banks who have gone that way, everybody learns as you go along and you tweak the platform as you go along, and everybody made mistakes. So nobody got it right the first time. So the answer is we wish we had all the answers day one and would have done it the perfect way. But that is in an ideal world. I think in the real world, you'll even learn from your agents what transactions they want to do that you're not doing, so you tweak the platform. Again, with us, we launched a smart account in 2014. We went to the central bank and said to the central bank that we want to bank the unbanked and therefore give us limited KYC requirements. And they hadn't heard of this before. So we designed the account and said for an account where the customer is transacting 10,000 cedis per transaction, we don't need the full KYC. We need a form of identification, and we don't need to confirm your address and all the rest of it. And they gave us the approval, and we launched a smart account. The smart account is an account that you can open in 5 minutes. We can meet you on the street, you fill a form, we get your identification, whether it's a driving license, a passport, or other ID, and immediately we give you a card, a proprietary debit card, and within 5 minutes, you get a PIN via mobile. So the picture goes to our central processing, it generates a PIN number, and with the PIN, you can transact on any ATM. You can have literally a bank account, a wallet that you can pay in money and get a record from. And we've onboarded nearly 500,000 customers on the smart account. Maybe we should have started earlier as well, because it's a long journey. So I wish we had all the answers and we didn't have any strategic risk in some of the decisions we took. But you'll make those mistakes. You'll buy a type of POS. It may not be as functional, and therefore you may change it to a more world-class POS terminal. And so on and so forth. But these are things you learn as you go along.
So roll with the punches, Armando. All the best with your endeavors too, and thank you so much for your question. We've got another question in the front. If you could please stand up, sir, and introduce yourself.
Thank you. My name is Edmond Bewa, Airtel Money, Ghana. My question probably could go to any of you. The key challenge around financial inclusion is how do we get a lot more people who are within outside the brackets to be within the space. A lot of the things that have happened and the products that we have developed seems to have focused on clients within urban areas. Several attempts have been made to make sure that those within the rural areas are brought into the fold. We don't seem to have made a lot of progress on that side. What are we missing? What can we do differently? Because today, more than, if I'm not mistaken, more than 50-60% of transactions happening is actually happening within the cities. What can we do differently to actually be able to get closer to, if I should use the word, financial inclusion? Because the people we want to reach are those outside urban areas. What are we missing? What can we do differently to be closer to the goal that we are chasing? Thank you.
Thank you so much for your questions, sir. Anyone keen to respond on the panel? Edward? Temi?
I think we have made a lot of progress, like I said, over the last 7 years, since about 2010, in bringing many people who were previously unbanked into the banking sector. There are challenges in banking people with very limited income in very sparse communities in rural areas. So typically, I've personally visited a number of village savings and loans associations, BCLAs. In a small village, you get a community of people sitting under a tree, and they donate money into a savings fund, and they borrow from each other. Some of them are not easily accessible. The amount of money involved is small, and for some of those communities, you can bank them deliberately as a bank, as a social responsibility, but it might not be profitable to do it. We'll try to look at how we can offer the community a savings platform. But again, the nearest branch is significantly, I don't know, it could be 10, 50 miles away from any sort of activity. So as a bank, what we see is that certain levels of income may not be viable for us. I won't pretend we can bank everybody, and maybe that level is $100 a month or slightly lower. And for that, below that, you may have other service providers. It could be NGOs, it could be susu collectors, it could be saving schemes to serve that market. And we can provide that association with the tools to be able to provide the service. So we would rather bank, say, a microfinance institution who will cover that community and give them the platform, the POS, the cards, and all the products, rather than we hire a driver in a car to go into those communities.
Exactly. Temi, I'd like you to respond, and I'd also like to throw in another element into that conversation with regard to alternative sources of financial inclusion, and perhaps if you can also add your point of view there, Maimouna, because we've also heard conversations that perhaps telcos need to come in, reduce the cost of handset devices, reduce the cost of connectivity, and perhaps that's a way of including individuals who are in rural outskirts to have more affordable phones and be able to transact using the best type of technological quality that might be available for them. Me care to respond, Maimouna.
And, thank you very much. I think you've mentioned a bit of the points, but one area I'd like to draw attention in terms of how do we reach the grassroots. I think it's something we've taken on board, but collectively, when I say we are main regulators across and the market operators as well, is how do we formalize the informal sector? It's a discussion we've not had already, but I think there's a big opportunity we are leaving on the table. Now, today, when you talk about financial inclusion, sparks go off when you talk about banks, telco collaboration. But I think beyond bank-telco collaboration, we need to have formal financial institution collaboration with the informal sector as well. Because over the years, those institutions, those associations, they are the grassroots. They understand the people. They sit with them, they eat with them. But the point is, the services are not as structured, right? And we know there's a limit to how they can scale. So instances where you have more of those collaboration at the grassroots can really support the flow of finance. And you touched on something just now. Sometimes for the big institutions, it's not economically viable to go set up a branch and crowd all their resources into that area. But they can finance an institution at that local area who can then do the affinity networking within that area. I think we need to have more of that. Some of the conversations that we need to push are issues like wholesale lending, for instance. Can you have, say, a microfinance bank in the local community? Who is your client? You lend to the microfinance institution, and he goes through the trouble. Microfinance institutions understand this very well. I mean, from my background as a person, from the commercial bank to the microfinance bank, you see that the business models are very different. Microfinance banks understand the grassroots. They can go knock on doors, yeah, right, around the community. But the commercial banks, I mean, no disrespect, they can do this as well to an extent, but with the financing and the support they have, if they support a local operator in that area, they can advance more. Maybe another area to add is, this is the area of fintech startups. So many innovations around microcredits, micro savings. We need to keep that conversation going. And I think ultimately, the beneficiaries will be the customers for which we're here. I look at my back, it says, clients at the center. I think when we keep that in the middle of our conversation, we will all think a bit differently. Thank you.
Maimouna?
At the African Development Bank, we have a need-based approach. In the rural area, we do know that people are cut out of electricity. Overall in Africa, 645 million people don't have access to energy. So what we do is we try to provide off-grid connections to people in the rural area. We have a target of 75 million connection. We also try to digitize value chains. In Liberia, for example, we have supported the government in digitizing subsidies to small-scale farmers. So this was like a digitally based financial inclusion, also based on the needs of the farmer. So we also, after that, we brought in the financial sector and set up a risk-sharing facility, whereas the bank, based on the data that was derived from the behavior of the small-scale farmer, was able to at least identify a potential customer and provide subsequent services such as microloans. And this model is replicated in Gabon. It's also replicated in Malawi and Togo. So basically, in the rural area, you have to focus on the needs of the population and bring that service digitally.
Taking it back to the customer and, of course, extending it in a purposeful manner to the individuals that we're trying to address here with regard to those in rural areas and in poorer communities. I want to piggyback on some of the themes that were highlighted in the responses to the questions, and there will be opportunity for further Q&A in just a moment. But by show of hands, are there any representatives of microfinance institutions that operate in the West African environment? And perhaps we can get your feedback from the floor to understand just exactly how you view the future landscape with regard to financial inclusion and some of the assistance that you might need from either commercial banks or regulators like we have on stage to actually aid your efforts in bolstering financial inclusion within rural communities in West Africa. I saw a lot of the hands earlier when we did that gauge towards the right-hand side of the room. Any representatives from microfinance institutions in West Africa who are willing and keen to continue with their efforts? There we go, we've got a show of hands. Sir, do you mind if we give you a microphone and let's get your perspective as to how the representatives on stage might be able to assist you in your efforts to really change the landscape, so that 5 years from now, we're having a completely different conversation with regard to financial inclusion in West Africa, where hopefully we would have achieved the goals that have been set out. Go ahead, sir, if you could introduce yourself.
Thank you. Good morning. Thanks for the opportunity. I work with Opportunity International Savings and Loans here in Ghana. And I must say, very insightful, learning from the Fidelity example. But we have followed them largely, Effah and his team. And the challenge is that sometimes the actors in the financial space don't see themselves as working together. The banks may see the savings and loans companies as a threat. The savings and loans companies may see the microfinance institutions as a threat. At the end of the day, the whole ecosystem is about the customers. So it's very important that we see ourselves as collaborators working in the same space, either financial institutions or telcos, working together for the purpose of the customer and reaching out to the clients that we have not been able to reach out to. Because some savings and loans companies, some rural banks are in communities where banks will never be able to have branches. And that's why there's the need for that level of partnership and engagement across the divide. And that's the dimension I want to add to the discussion in moving forward in the years ahead.
Is this a polite challenge to Mr. Effah to perhaps have a meeting with him in his boardroom on Monday for collaborative efforts?
Yeah,
If you would respond?
No, I can't agree more. We collaborate with a lot of savings and loans, MFIs, we support them. There is no point in trying to serve every customer and reaching every customer. There are communities where there are community champions. They know everybody in the society, and it'll be very difficult to go into that society and try and win that person's customer. So whenever we can, we collaborate. We have a lot of partnerships. We have MFIs and savings and loans that we support, and they bank with us. So we lend them money, they on lend. Some of them, they want to do money transfers, we clear checks for them. They want to establish an LC for their customer. We do all that for them as almost like their correspondent bank. So we're all for partnerships. We don't pretend that we can reach everybody. But I don't think all the banks have the same philosophy.
That's a open, I guess, agreement and challenge and perhaps acceptance of that meeting request that might be likely to take place. Any other questions from the floor? We do have your hand, sir. We'll take your question. Anyone else with a question? We'll take 2 questions at a time. We've got another hand right behind you, sir. We'll start with your question. If you could please stand up and introduce yourself, sir.
Hi, I'm Dennis Munoz. I work for Microcred, a microfinance institution in West Africa, primarily Francophone West Africa, but also Nigeria. I wanted to reflect also on what a colleague said here. I think partnership, how can we build better partnership is for me key. And I think it's actually very related to the regulation. My perception today is that we have telcos, microfinance, and banks in 3 different boxes with sometimes some rules that apply to each of them, to some of them, but not all of them, and generate some situation where some actors have some monopoly on some activities and forces the others to find other ways around it. And I think a less siloed approach to regulation and a more risk-based approach to regulation would really help to say, well, whatever your fundamental nature to some extent, if you show that you are controlling the risk of this or this activity, you may start this activity rather than saying your license is this, you may not do this, or you may do this. We end up in a situation today where sometimes we are not allowed to do things that some telcos are allowed to do, but we control the risk over this activity sometimes better than some telcos, just because we have a different license. Yeah, thank you.
Thank you so much for your feedback there. Not too sure if you want to respond, Maimouna, and perhaps piggyback off of the sentiments that he's alluded to specifically.
Just perhaps to stress on the importance and the role of the microfinance sector in West Africa. You have approximately 700 MFIs that provide services to 12 million people. So yes, we have digital financial services, but microfinance services are still relevant nowadays. And the challenge for AFDB is to build capacity in this sector, provide grants, technical assistance to allow these MFIs to be stronger and to also participate in the regional payment systems along with other players.
Fantastic. We'll take your question, ma'am. If you could please stand up and introduce yourself and pose your question to the panelists today.
Thank you. My name is Ruth Odera, and I come from a country where M-Pesa has revolutionized payment systems, and banks are engaged with telcos and MNOs to develop payment systems and mobile banking. My question is to the regulators. How do we ensure that the consumer is protected and the banks are also protected in the engagement? Because using the mobile wallet, there's a lot of risks. There are very high risks in the risk of default. So how do you ensure that both parties are protected, the banks and the consumers?
Thank you so much for your question, ma'am. Temi, would you respond?
Yes. Thank you very much. Consumer protection is actually central to financial inclusion. Because when we are talking about bringing people that have lived their lives in a certain way, and you want them to come into the formal system, then we better protect them. Yeah, so if I use the example of Nigeria, we have instituted a consumer protection framework, which is very broad, and it talks very specifically about the roles and responsibilities of a service provider in different directions, and it also stipulates on the other side the responsibilities of the consumer. Because oftentimes when we talk about consumer, we are thinking only of the clients, but the regulator is thinking of the clients and thinking of the operator as well. Because there are activities of the consumer that might affect the operational well-being of the institution, so it's both sides. And what consumer protection does is it provides that balance between the two players. It's a financial transaction, and where money is involved, people are very sensitive. So what you want to do is to define the rules of the game. This is the limit within which this happens. If something goes wrong, there has to be a redress mechanism. I've done a transaction, I didn't get paid, I was overcharged. There has to be a redress mechanism. And when that is communicated well enough, what you will do is to build the confidence of the consumer in that service. And when the consumer trust is strong, we are sure of repeat patronage, and then you can grow the sector itself.
Well, thank you so much for that question, and I hope that the response has also managed to address some of your concerns. I was hoping we'd get a conversation on cryptocurrencies as well. We talk about the digital age, right, and the digital revolution and this new future that we're working towards. And of course, this also plays an element. From the audience, before I actually pose this question to my panelists, I'd like to get your views by show of hands. If you believe that cryptocurrencies perhaps should be incorporated as a solution to help drive financial inclusion. Yes, if you believe that this is the case, please raise your hands. Some of you are doing it reluctantly so. Well, it seems as though we've got a few audience members agree. I take it for the rest of you with your hands down. You disagree, correct? Yeah, okay, still not too sure, but let's actually talk about that, especially given that we're looking at the future of how best to address financial inclusion in the West African context. Does cryptocurrency need to be a feature, and should we be having this conversation? Is it relevant? Maimouna, let's start with you.
I think cryptocurrencies could accelerate financial inclusion, but there are priorities before. To me, it's a matter of a maybe fourth generation. Like I said, in the region that I'm referring to, we're still struggling to get to second generation financial services. So it would be good to focus on those. However, cryptocurrencies are based on a general ledger technology that is useful to accelerate and fast track financial inclusion. For example, it could be used for software in a switch to interconnect several players and transactions. So in that sense, the technology behind cryptocurrency is useful financial inclusion, but the currency as itself, it may be early for, at least for Africa, I can say.
We know that the central bankers have a very strong stance on that, but Edward, let's get your view first before we come to you, Temi.
I think we need to distinguish between the currency, like Bitcoin, and the technology behind it, like blockchain. Yes. Blockchain can be used for remittances and other products which banks are considering globally. And that is a technology, and it can be adapted to launch different products. In terms of Bitcoin in Ghana being used to advance financial inclusion, I don't see it. Even our online platform is used by probably less than 10% of our customer base. And I just can't imagine that many of the rural dwellers who are struggling to buy a smartphone want to be buying and using Bitcoin to transact. It's way away from reality.
Exactly. Temi, I think it's fair to say we know where your stance is, right? Given that you represent a central bank.
It's interesting, actually. So should we be talking about it? Absolutely, yes. Should we be concerned about it? Absolutely, yes. And why do I say this? Financial inclusion is really about bringing the people into the system, right? But we know today the underlying fundamentals. Maimouna talked about power. He talked about internet access. I think I'll throw on another thing, literacy, financial literacy. So I think for me, the underlying fundamentals that we need to address. But should we talk about it? Again, I say yes. And ultimately, we are looking for whatever the technology is, whatever the innovation is, to advance financial inclusion. But we're also aware that it is a changing landscape. I talked about Nigeria. 5 years ago when we developed the financial inclusion strategy, there was no regulatory sandbox on the table. But this is 2017. Yeah. Now we're talking about sandboxes. So the market keeps changing. Yeah. So what do the regulators need to do? Upskill, learn, and adapt. I think I'll leave it there.
I think you've closed off with very powerful points with regard to how regulators need to respond. But of course, we also have a room of innovators, entrepreneurs, and individuals who are leaders within their institutions that deal with financial inclusion. Some of the concerns that we did hear with regard to the West African environment deal around corruption, knowing your customer, as well as privacy. Maimouna and Edward, as we come to you for your closing remarks, very briefly, in less than 30 seconds, how best do we need to address financial inclusion in the West African landscape to address some of the concerns that were highlighted in today's conversation, and tangible results that can be achieved in the short term?
I'll talk about three things. I'll talk about regulation and leadership, digital financial services, and I'll start with those two. With regulation and leadership, I think you need a national agenda to say that we want to take financial inclusion seriously. And I'm happy to say the government of Ghana has developed their own financial inclusion strategy. They have launched the national ID card. They've promoted interoperability amongst the telco operators, and they have also launched a digital addressing system. And all that feeds very well into the whole national financial inclusion strategy, because it makes KYC easy, it makes it easy to identify where people live, what age they are, what income levels they have, and to develop products around them. So the central bank should also be keen to promote it and support it. So that is the sort of the national agenda, the leadership, and the regulation around it. Yeah. Then we need to look at how we can drive products on mobile. At the end of the day, we have more mobile phones in Ghana than adult registered voters, which means everybody is accessible, whether it's a smartphone or using USSD technology. So on that basis, we should be promoting and going past payments on mobile money to...
Edward, 15 seconds, unfortunately, is up on your end. Maimouna, we'll give you
quickly,
your 15
just to
seconds.
perhaps say that the response could be in the RA. What's the RA? Rules, rails, accounts, and apps. We've been doing a good job setting up, establishing infrastructures, rules through regulation. Now there's a challenge with the apps and the accounts. The accounts are almost there, but then the apps, the services behind, we have to build on the momentum, like I said before. Users are there, but they need services. We have to retain them in this financial system, otherwise we just lose them. So putting together these pieces of the puzzles, the rules, the rails, accounts, and the apps would help. Last thought, identity, and not just only simple identity, financial identity. Yeah. When I look at the Indian model, the Indian stack, I dream of an African stack, right? Where I can financially identify my people through biometry, know about their credit history, and then they can get instant loans. This is where financial inclusion starts. Not access, but also usage. It's not an old debate.
Fantastic. Well, that's how we'll wrap it up for today for our panel discussion, giving us insight into the financial inclusion landscape within West Africa. Naturally, it is a national agenda. We have various stakeholders here in the room who were set to fulfill this agenda. And of course, it does need to trickle down not only into regional integration, but again, touching the lives of individuals whose lives we hope to change. A customer-centric approach, making sure that we address all the needs that need to be fulfilled from a regulatory perspective, but of course, the end user and customer at the end of the day. Ladies and gentlemen, the landscape is open for innovation and of course lots more investment to certainly take place, given that the tide is also turning for many of these West African economies. But that's how we wrap up the conversation for today, taking a look at the West African financial inclusion landscape here at the MasterCard Foundation Symposium on Financial Inclusion for 2017. A big thank you once more to my panelists for joining us in conversation. Ms. Temitope Akin-Fadeyi, Financial Inclusion Head, Secretariat at the Central Bank of Nigeria. Mr. Edward Effah, Group CEO of Fidelity Bank Ghana, and Ms. Maimouna Gueye, the Principal Financial Inclusion Officer at the African Development Bank. A big thank you as well to our audience members and participants here at the symposium for 2017, sharing their insight as well as questions with us and our panelists. To you at home, you can continue watching online at cnbcafrica.com and keep the conversation going and follow the themes and outcomes that follow through from the symposium using the hashtag SoFI2017. For CNBC Africa, I'm Gugulethu.